So how many of you out there who are watching this video today have $5,000 that you may be able to start with and put into your personal account, trading account, right? Or broker account. I know some of you may not have that much, and if not, I would highly recommend switching and change or trading the micro futures, okay? Whether it's the indices, commodities, financials, whatever it is you want to trade. I primarily stick with the equities or the indices like the NASDAQ, the ES futures, you can trade the Dow if you want to, or the Russell. Most time I'm trading the NASDAQ. I do also look at the ES, but if you trade in the ES, it's the MES. If you trade in the NASDAQ, it's the MNQ. But if you have $5,000 saved to start with and put into your own personal trading account, I would recommend, I'm telling you this now because I'm not sure how many of you out there are trading more than this percentage when it comes to risk management, is 5%, okay? Now, if you're trading more than 5%, then you're risking a whole lot more when it comes to an account size of that nature, all right? So, I always tell people that, because they always ask the question, how much should I be risking? Well, it's going to really all depend on you. I'm not here to tell anyone, oh, do this, and, if not, then this is going to happen. You have to understand that the capital you have is your very own, and you have to understand, how to trade it correctly. Now, 5% is a good risk of, a good rule of thumb, I'm trying to say, as far as how much you may want to or have a risk tolerance of. Now, I'm not saying that you have to go up to 5%, and I do not recommend going over 5%. I mean 5% or lower. But even on 5% on $5,000, basically you're stating that I don't want to place more than a $250 risk, meaning stop-wise, on the back end of a trade when I place these trades. So maybe most people are looking for a 1-to-1. So if you're looking to trade or risk $250, you're looking to make $250, or a 2-to-1 to where you're risking $250 to make $500, correct? You could do that trading the E-mini futures. A little bit tougher with trading the micros. I talked about the same rule of thumb, 5%, trade the micros, in a few other videos. So please, kind of watch some of that content. I recommend you watching, if not all the videos here on the channel, but starting with like this one right here, this video here, and working your way back. Yeah, there's a lot of videos, and you can actually go to the channel itself and use the search tool, and you can search any keywords that you may want to find video content on. Again, just go to the homepage and, click on that little magnifying glass. Now, how do I go about doing this? It's very simple. You have to have a strategy, right? But the number one thing that you need to understand is structure of the market. How can you trade if you don't understand which way to trade, right? You need to understand if you need to take a trade going long or going short. And that's what structure helps to lay out the playing field for you, so you know which way to actually place your trades when you're engaging, or it doesn't matter which particular market when it comes to futures that you look at, because once you master structure, you can trade any particular market. You got to know, because the market can only move in 3 different directions. That's up, down, and sideways, and you don't want to be trading really sideways, because that's the time when the market is actually ranging. But I would like to hear from you guys out there. How much of your capital are you risking per trade? Is it more than 5%? Is it less than 5%? What do you find is a middle ground and is actually working for you? I think 5% is, the max amount. Say, again, we're talking about $5,000. So with that type of account size, $250 is the max of what you should be risking per trade, looking to at least get a 1-to-1. Now, I talk about, here on the channel about, getting the 20 points, right? Or 20 plus points. Just imagine trading one contract on the E-minis. We'll say the NASDAQ, for example, okay? And getting, earning 20 points. That's fairly easy to do. Most trades, scalping, you're going to pick up probably a minimum of about 10 points, because the market, the NASDAQ has a lot of room to move in. It moves pretty quick. It's a very volatile market. But 10 point scalps on the NASDAQ, a lot harder to do it on the ES, but it can definitely be done. But 10 points on the NASDAQ can happen in a blink of an eye. 20 points, you can definitely do this as well. So if I do some quick math real quick just to show you, 20 points, right, times 4, because there's 4 ticks in every point. That's 80 ticks, and if you go times the actual tick value, which is $5 a tick, that's $400. So just imagine, just on 20 points, how you can, basically gross $400 on a trade where you've only risked $250 just looking to get or trading one contract and picking up 20 points. It's fairly easy to do so, okay? And just imagine doing that twice, because you also want to have a limit on the amount of trades that you want to take. So that's another thing as well. Not just, how much are you risking on a percentage basis, but how many contracts are you actually trading, each time you get into a trade? All right, that's something too. And also, how many trades are you taking? That's really important because you really want to limit the number of trades that you're taking, in a session. That means how much time are you spending engaging within the markets? All right, I have like a 2-hour max. Okay, whether it's pre-market or during the session, or an hour here, an hour there, somewhere between 7:30 and 9, and then somewhere between 9:30 and 11. 2 hours max, and be done. If you spend too many times in the market taking too many trades, and let's say you're up, your first trade, and then again a second trade, why would you take the additional risk of trading and continuing trading if you're already profitable? That's what kills me with a lot of people, is that I see them taking so many trades, and I don't know what they're trying to prove. I guess maybe they're trying to see how consistent they can be during, day to day on each session. But you have to understand, we don't control the market. Once you become profitable, let's say on your first or second trade, guess what? You've made money. Okay, why would you continue to enter or put yourself or allow yourself to enter into the market to where then maybe the third trade it blows everything you made for the day, and you continuously doing that vicious cycle every day of the week, to where you're up, you're down, you're up, you're down. That's going to start to mess with your psychology, because now you're not able to become profitable in any kind of way, and you're not working towards consistency. So the best thing to do is limit the number of trades. I have like a 1 to 2 max rule. 2 max is really, where I stand at. And if you take a loss on the day, this is what people, you have to understand this. More people are profitable because if they engage in the market and take one trade and they lose, they're out, they're done. They're going to do it again the next day. They're not going to keep pushing the envelope to where it's like the second trade they lose, the third trade they lose. Or let's say the fourth trade they win, but you already have 3 losing trades, and that fourth trade, it's you got to climb so much out the hole just to cover the last 3 prior trades you made to be profitable in a day. Can it happen? Yeah, it can. But what's the reality that it's going to happen most times? The probability there is very low. Okay. So you have to understand that when you're up and ahead, be done. When you're down on the day, be done just as well, to protect your capital, because that's what this is all about in this business, is preserving what you have so you can continue winning the next day, or taking a trade the next day. Don't get in there and start putting everything on the line, rolling the dice, because that's going to blow your account. And I know a lot of you out there know what it's like to blow account, especially when it comes to if you're using prop firms. How many of you out there have actually, spin the wheels and have probably spent hundreds, if not thousands of dollars put into these prop firm evaluations or challenges? I know some people are making money doing this, don't get me wrong, but one thing for sure, I will say this. I believe the challenges with the evals from prop firms is a good way to really, once you have perfected maybe your strategy by back testing, forward testing, and also learn the concepts educationally when it comes to understanding how to trade the correct way by reading, structure and understanding price action. I think the next step is to see and test for yourself before you start putting your real money on the line, if you can be consistent with the prop firm evaluation, or at least pass one. And then there's another hurdle after that. And what is that? There is where I'm funded. How long can I keep that funded account? That's where most people things kind of fall to the wayside. They pass the eval or the challenge, and then once they get funded, they quickly lose that account. So I believe, again, like I said, I believe it's a psychology thing there. And then they put money back into it again, the machine, okay, and then they pass another challenge, and then at some point you have to learn your lessons, right? You have to undo your wrongs and understand and jot down what you were doing wrong to correct, so you can see how to move forward. So that's the thing about the evaluations of the prop firms out there. I do believe they can be a good tool if you use them to your advantage. But I will say this: if you are passing those evaluations and funded accounts, and you're taking payouts, put the money away, or at least start putting money into a brokerage account of your own, your personal. And the only reason why I'm saying that is because at some point you want to kind of possibly cut the ties of, for one, not having to pay whatever percentage of commission that you are pushing back to them, and put that back in your own pocket. And then number 2, you're also not having to live up to the rules, so to speak, that they have set out, that you have to follow. So I know a lot of people probably, that's tough. You have the thing about having your own trading plan. You live inside your own rules, and so you're basically, if you go against your trading plan, then you're going against yourself. with the challenges and with the prop firms out there, they have their own sets of rules and they're designed because they want to see you fail, believe it or not. They want to see you fail because the fact is that's how they continue to make an income or make money, is by allowing you to, and then giving you just a piece of breadcrumb that you could trade from, and then it could quickly be diminished because a lot of people, they get out there and they start trading more contracts or not following some type of risk management rule, and then they blow that account real quick. So, again, if you know how to trade and you're consistent, back testing and forward testing, you can maybe want to start small and trade with your own live money, but it's up to you. But this is about the $5,000, right? We're talking about if you have it today. Again, how much should you be risking? Just 5%. All right, I'm gonna leave it just like that. Now, how can you do that? I talk about that here on the channel with the strategy using multi-chart confluence. It's basically where I do a step-down approach, like most of you probably are familiar with, top-down analysis. But what I do is I mark up my higher base chart or higher time frame chart first, finding a zone surrounding supply and demand, and then I mark that up. And then what do I do from there? Okay, yep, it could be a higher time frame, but you may be saying, well, why would you want to take a trade from a higher time frame zone? I don't. But I want to mark off my higher time frame because the higher base charts are going to hold more weight when the market does come back to those zones, because it's a whole lot more buying going on at certain areas or key areas. Like right here, look at that, aggressive buying to the upside, lots of buying off of a higher time frame chart. So when the market comes back to it, more than likely there's going to be something that happened at the actual zone right here. Another demand zone to the upside, breaking structure right here. Market comes back to it. When the market comes back to it, you can almost expect that it's going to react in some way or another to be able to take a trade. Now, once I mark it up from the higher time frame, that's when I'll go down to the lower time frame to find what I like to classify as a zone within a zone. So let's say that this was a higher time frame, which is that blue box right there. That was a higher time frame, 120 range demand zone right there, which is right here on the higher time frame, my 120 chart. I'll move down to the 24 range chart, which is my entry chart, to see if I can find a zone within a zone, meaning a smaller demand zone resting on the inside of my higher time frame 120 zone. Okay, so multi-chart confluence. Trading is all about confluence. It's all about probability for one, but it's about confluence. The more confluence that you have on your side, the trade is more so going to work in your favor. Like right here, this is a beautiful area of supply. That blue box is from this area right here, right here. Supply right here coming down to the downside, breaking structure, coming down right here, pulling back to the supply zone right here. Off the higher time frame, it's a high probability zone, and then there's a nice supply area resting back up in here that you can actually go short from. So that's what I'm doing to be able to. That's the strategy in itself, and I talk about that a lot here on the channel. I'm not going to go in detail about the strategy here because this video is more so about, if you had $5,000, how much could you actually end up making? Well, you can make $5,000 within the first month using that $5,000 that you had to start with. Okay. But then after the first month and really the second month, things really start to take off. So let's imagine if you were able to, I'm going to bring the calculator back up right quick, and I don't want to, waste too much time, but let's say, for example, that you had the $5,000, right? Okay. And you say I'm risking 5%, right? Which is $250, and you're looking to make, or risk 5% to make 5%, or risk 5% to make 10%, whatever it may be. I'm just saying. So basically, if you're risking 1-to-1, that's like risking 250 to make 250, or 2-to-1 risking 250 to make 500. So let's say we're going to stick with that 250, right? And we do that 5 days a week. That's $1,250 times 4. That's going to give you $5,000 a month. So at the end of the first month, again, you move from the initial 5,000 you started with, now you're up to $10,000, right? If you can be consistent day to day. And, you may be saying, well, that can't be true because not every single day I'm going to make 250. No, you may not. But by the end of the week, you can almost bet you're probably going to make $1,200 or more by the end of the week, because you should have better trading days. I'm trying to say your gains are a lot more than you're actually risking. So, we're just talking about a minimum of 1-to-1 risking 250 to make 250. That can be done with trading a $5,000 account. One contract now on the E-minis. Okay. So you should be able to make that weekly, $1,200 if you have a $5,000 account. Okay. And in most instances, you're probably going to make, a lot more than $250 a day. You're probably going to make $500 a day. So if you were making $500 a day, or let's say you had a couple of days a week where you made $500. Okay. So let's say we had three $250 days, right? That's $750. Let's say 2 days we made $1,000, made $500. So one day 500, next day 500. Okay, $1,750 for the week, right? So you should be able to kind of balance out and do at least $1,250 a week to give you that $5,000, and you can keep it consistent from there, running it month to month to month. So starting with 5, you could at the end of the month you should have 10. Next month you can make 5, or you can bump it up a little bit more and say, okay, now that I'm at 10%, again we're only risking 5% of the account, so now you're risking $500 to make $500. Okay, that's a 1-to-1. 2-to-1 would be risking 500 to make 1,000. Third month, so it starts to really take off, as your account starts to slowly compound. That's called growing a small account and allowing it to compound, so you can then continue using that 5% rule to continue to make more money each month going forward. You don't have to really bump the contract size up. You can keep it the same, or by keeping it the same and just going for more profit, meaning more points in the market, or you can bump up your contract size and just keep the point basis the same, meaning where I was looking for maybe a 20-point move on the market, I would, instead of looking for 20 points, maybe I'm looking for 25 now, or 30 points in the market, just depending. But you got to pay attention, because I know what you're probably saying, well, that's all dependent on structure and price action. It is, okay? So that's why a lot of people, once they start making money, they'll start increasing their lot sizes and keep things the same, meaning they're still going for the same 1-to-1 or a 2-to-1 type of trade, and they're still, kind of risking the same amount, all right? But what they're doing is they're increasing their contract size to be able to make more money. Okay, so hopefully that makes sense, guys, but it's very possible to do that. So within the first month, if you consistently, I'm saying this right now, started with a $5,000 account, you should be at the end of the first month make $10,000. Okay, that means $5,000 that you started with, and then the 5 you make. All right, next month, let's say you keep it the same, right? If you keep it rolling that way, $5,000 each month, and don't change anything, meaning increasing the lot size or going for more points, where you're going to be making $5,000 every single month. Okay, so then 5 times 12, that's what's that, $6,000 a year. Yeah, okay, yeah, that's definitely a salary, but the goal is really to increase it, hopefully month to month, by using that 5% rule. All right, so $5,000 first month, next month you got 10. 5,000. We'll just do the math right quick. Let's say we got 10,000, right? Times 5%. We're risking 500 to make 500. Times 5 every day. Okay, that's 25. So the first month we're doing $1,250 a week. Now we're doing 25 a week. And let's say times that's 10 grand. So at the end of that second month, 10 grand. You carry 10 grand from the last month, carry it over to the next month. Now you started with 5, now you're up 20. Again, the way they do it is they increase the contract size each month, maybe by 1 contract, or going for more point basis, from month to month. So first month, maybe you're going for a little bit over 20. Second month, you're going for more, than 20, maybe 25, whatever the case is. So, but it's going to eventually, if you're going for point basis, it's going to get kind of hard, aiming for higher points if by keeping things the same, trading 1 contract. So the best thing to do is kind of bump up your contract size, or just keep it consistent, and until you probably reach a certain threshold, or whatever the case is. Maybe you say, hey, I want to keep my contract size the same until maybe I got $50,000, $60,000 or $100,000 in my account, and then I'll start bumping up that way. It depends on, you have to kind of look at the numbers yourself to see what you're comfortable with, in reference to how many contracts you want to actually trade with. So people always have that magical question, and that being, how much money can I make with a certain amount of money? So if it's $5,000 or $10,000 or $2,000, look, you have to depend that, not dependent, but you're going to have to decide that for yourself. All right, because that's the part about trading that I don't really like to talk about, because the sky is the limit, the ceiling is the limit, when it comes to actually trading. I mean, you can make a lot of money, or you can make none, just depending. But it all depends on the strategy itself. But you have to have a rule or put in place for yourself, and that's where I kind of use the 5% rule, because it kind of keeps you max of 5%. That kind of keep you in line with keeping your capital in check, keeping you in check, meaning what your limitations are as far as how much you're willing to risk in the market versus, and how much you're willing to make in the market as well. I mean, of course, we want to make more, whether it's holding the trade out, but we should always be mindful of how much we are initially risking, whether it's $250, whether it's $100, whether it's $500, whether it's $1,000, you have to know and have something written in your trading plan as far as what is my risk margin? How much money am I willing to risk when it comes? That's called risk management. Risk when I place each one of my trades. Okay, that's going to help again preserve your capital and keep your capital growing. So hopefully this video kind of resonates and helps someone out there. But again, let me know, how many contracts are you? First of all, what are you trading? Secondly, like, how many contracts are you trading? And the biggest question is overall is like, what is your risk parameter? Like, are you risking just 1% of your account, 2%, 5%? Like, if you're really doing more than 5%, like, you really must have a very, very, very large account. But I really don't, honestly speaking, it doesn't matter what size account you have. At some point, you have to know that by keeping your risk tolerance or in line, that means, you know, practicing proper risk management and carrying it through no matter the size of your account. That's what's going to preserve your capital for you and help you grow as a trader. So leave a comment down below. I'd like to hear from you guys and let me know, you know, what is the risk factor or risk amount percentage wise that you are taking on, you know, if you're traders. I know some people, they go for the full gusto. They think that I got 5,000 in here, I'm going to risk $2,500. Why would you do that? That's 50% of your account. That doesn't make any sense. Okay, because you take one losing trade and you're going to blow an account very quick. Okay, or even 10% of your account. That's really heavy. You know, that's on $5,000. That's $500. Why would you risk that much of your account? It don't seem like a lot, but again, if you do that a few times, just 10 times, you're out the business. You're out the game. Okay, and 10 times you may say, well, I got 10 opportunities on $5,000 that I could trade. You know, having a risk tolerance of $500, right? And that's trading basically one contract. Yeah, I mean, that's fine if that's what you want to do. But again, 10 times and you're out the business, that means you're going to lose 10 times. You're going to be done with. Okay, so I would carry that smaller wise or have a less or lower risk percentage amount. Okay, 5% max. Now we're talking. Okay, really, you know, some people 2 to 3%. You hear people talk about. Yep, there's nothing wrong with doing that. Okay, because again, it's about compounding in the end. I know I'm kind of rambling, but I just want to kind of beat that, and so it ingrains in people's minds that what's going to lead to you to become consistently profitable is going to be the portion of really when it comes into your trading plan. How much are you risking? Okay, but that's all I have, guys. If you really want to really dive deep into my trading world and how I actually trade and the strategy I use, you may want to think about becoming an elite member. Okay, it's very inexpensive. It's only pennies on the dollar a day, and you're basically supporting the channel. But what you're receiving so much valuable information, like the trades that I post over our Discord community. And if you're not a Discord member and you want to join, it's free. The link is down in the description portion of the video. The second link is titled Ultra Elite Supporter. You can click on that and you'll see a couple tiers pop up. All right. The last two, you probably want to join one or the other. One is for $6.99 a month. The other one's for $14.99 a month. There are differences because with the elite or basic elite supporter group or membership, you receive my trade breakdowns. That's where over in the Discord, I'll post trades. I will make video content for that private community to break those trades down so they grasp an understanding of the setup that I actually took, why I took it, walking you through structure, through price action, talking about stop loss placement, talking about profit target areas, things of that nature. And I do that in every one of those videos. Okay, and there's tons of them for you to watch. Also, you receive the trade breakdowns in the video playlist, all for just $6.99 a month. Now, what does that break down to be? Like, what is that? Like 25 cents on the day? Okay. Now, if you want to become an ultra elite supporter, that's where you also receive everything that's included in the elite membership, plus my live recorded trading sessions. Okay. All right. So as I'm trading day to day during the week, I'm recording my sessions so you can see the entries I take. You know, I'm basically walking you through. I'm talking in those videos about the market, what structure looks like, why I took those trades. You see me take the trades live, and I talk about, you know, profit areas, stop losses, all that in those live recorded trading sessions. Plus, you get the market recap videos. That's where I'll go back and I'll do that a couple times a week and give recaps on the market, talking about or looking at, you know, other possibilities within the market that were opportunities to take trades from. Again, because I don't trade the afternoon session, so I'll look at that just as well. And we'll also look at, you know, structure throughout the day to kind of see, okay, this was a pivotal turning point in the market, if there was any, or we're trending to the upside. You know, what are some areas of things we should be looking for? things of that nature. Okay, so again, you can receive that becoming an ultra elite member, so you get everything in the elite membership plus the additional with becoming an ultra elite, and that's $14.99 a month. It's like 49 to 50 cents on the day. All right, so if you're interested, the link is down in the description portion of the video. I appreciate everyone out there who does support the channel, and your valuable feedback letting me know that content that I provide in the private community has helped you guys out so much. But yeah, that's all I have to share today. If you're interested, again, the link is down in the description portion of the video to become an elite member, and also the Discord is there as well. Now, if you're not already subscribed, please take the time to sub by clicking that button down below. Make sure to turn your post notifications on. How? Click the bell as soon as you click on the subscribe button. Last but not least, please drop a like on the video if you found some value in today's content. Appreciate it, guys. I'll see everyone over on the Discord community starting tomorrow. And I hope everyone had a fabulous weekend. And to all the fathers out there celebrating Father's Day today, I wish you happy Father's Day. And that's pretty much going to wrap it up. I'll see everyone tomorrow over on the Discord, like I said. Take care.